Welcome back, Alpha Hunters. The markets are closed for the week of January the 26th. All right, we had a little bit of a gap up to start off the week on Monday, but that was kind of it. Outside of that, there wasn't too much actually going on. We got a quick pump there in the morning. It came right back down to kind of where it opened, and it just kind of went sideways basically for the rest of the day. Not too much kind of going on there on Monday. Tuesday, basically a flat open. A little bit of a sell down, but would even break Monday's low. Kind of got bought up as we went into the close Tuesday by the end of the day. Wednesday, we had a huge gap up. This was mostly from some earnings that were coming from different companies. And yeah, nice gap up there on the SPY and the Qs. Very quick sell off, but kind of pumped up there. Kind of a little double top as we kind of went into midday, and then a steady pull down as we went into close the last 2-3 hours. Thursday, nice gap up, traded sideways there for the first couple hours, a little bit of a pull down, didn't break the Wednesday low, but then bounced as we went into close. Kind of got back up to the daily highs. Friday, kind of a lower open, pushed higher here on the SPY. I'm going to come back to this point a little bit later on. And pulled down, rolled over there midday, kind of went sideways. Tried to rally it to go into the close, and it just kind of stopped, reverse course, and just didn't really do too much there at the end of the day on Friday. So some of the economic data that we did get this week, kind of mixed. Durable goods orders came in a little bit down than what was expected. Expected was 1.1%. And it came in at 0%. GDP growth rate came in at 3.3%. It was expected to come in at 2%, so quite a bit higher than what was forecasted. So, yeah, that was kind of an interesting one. So that was all Thursday morning. Friday morning, we got core PCE. That basically came in flat at 0.2%. Personal income month over month came in flat at 0.3%. Personal spending came in a little bit higher, 0.7%. Forecast is calling for 0.4%. All right, take a look here at sector rotation for the week. Well, it was kind of interesting because we got to Wednesday after the bell, and you thought maybe Tesla was going to absolutely tank the week, and really Tesla did tank the week. I'm not going to sugarcoat that one, but it didn't tank the market. So that's why you see the XLY really underperforming there. You can see it really dropped off there Thursday, kind of. Tried to bounce there on Friday. Amazon bounced a little bit on Friday. So there you go. XLY underperforming mostly because of Tesla. XLRE real estate also underperforming. Healthcare, materials, utilities, tech, staples, and industrials all underperforming there. Financials outperformed the market this week, as well as communications and energies outperforming the market the most. So yeah, energy's got it going. Go take a look at some crude or gasoline or heating oil, and you will see a huge breakout on Thursday, and it continued on Friday. So looking pretty good there on commodities. All right, take a look here at the VIX daily chart. Not too much going on. Just kind of still chopping in this consolidation sideways zone, and not really too much to talk about. The only thing that's really kind of interesting is the market continues to make highs. SPY new all-time high Friday morning. And we still have not even gotten back down to the low that we put in on mid-December on the VIX. So, yeah, kind of interesting. I don't really know what to make of that. I don't know if people are just being overly protective from anything. I don't know. It's kind of baffling. Not really one to remember a time period where it's been like this. But the VIX is at a lower level, so it can definitely hang out down here, and we can continue to trend bullish on the market. I think I've kind of mentioned that a couple weeks back. So we can definitely just stay down here and we can trend bullish on the market. That's kind of normal. All right, taking a look here at the DXY, the dollar index. We are consolidating here very nicely. I was kind of mentioning this last week, definitely as we went throughout the week. This is looking pretty good to be bullish going forward into the future here. We had a subtle pullback into the moving averages kind of last week. Then Tuesday this week, we popped up over those highs of last week, but we didn't hold. And then you were thinking maybe that's going to be a false breakout. We're going to about to reverse course. And we basically kind of started doing that immediately on Wednesday. But here's the thing. We made a rally in the day on Wednesday, and so we didn't have the breakdown either. So typically when you get the double false break like this, go back with the original direction is typically the way to go. It's not one that you can put that chip on the table yet. If we make and close above some of these highs, like 103.7 there on the DXY, you're probably looking to be bullish here on the dollar. So be kind of mindful about that on the equity side, because that's going to probably start to affect some equities as the dollar looks like it's going to continue to rally, but you're just wanting a close up into the like upper ends of some of these wicks and above. GLD, yeah, it's also consolidating, looking like it's going to break down. I wouldn't. It's not one that I would want to be bearish on. I would just rather just still be a bull on any kind of dips. So I think this is going to be a pretty good spot to kind of hide out down the line. But as for now, it looks like we're probably going to break down, especially if the dollar breaks, bullish. We'll probably see the gold drop, but I wouldn't want to be bearish on it. I'd rather be bullish. And I think we're probably just going to be in a longer term kind of basing pattern here. That can last maybe a couple weeks, couple months, and then maybe we push up later on. 10-year yield, nice consolidation. Kind of looks like the dollar, a little bit different, but yeah, we had a pretty good engulfing bearish candle there, at least a bodily bearish engulfing candle there on Thursday over Wednesday, but we bounced on Friday. We haven't really gotten below the moving averages, so yeah, it's one that if we get back below the moving averages, you're probably just expecting the yields to continue to drop, which probably just going to be bullish on the stock market. If we continue to not break down, especially early parts of this next week, like Monday, Tuesday, you're probably just looking like we're going to break up. Now, I say that, but we're also going to have Fed this next week. I'll get into that a little bit later. 10-2 inversion, nice bounce this week on the 10-2 inversion, even though we ended off the week highs on Friday coming down pretty good. This could just be in a very choppy kind of sideways accumulation, consolidation. So, for now, it's not breaking higher. It kind of got up to these tops where it topped out before back in October, and it pulled back into the low parts of where it bottomed back in October as well. So it's just might just be consolidating here for a little bit. HYG, high yield corporate bonds. I'm going to talk about. We got this somewhat of a pennant pattern consolidation kind of going on in here. And it is one that it looks like it is going to be getting compressed. Kind of got like a flag pattern. I'm sure if you looked at it on a weekly, it looks like a flag pattern. So we got a little bit of a consolidation here. You're thinking maybe we're going to push high and break out. But then Friday just confirmed that people are definitely watching this downtrending line because we rejected right off of it. So I would be... I'll also be kind of watching that. There's a lot of things kind of like consolidating right now. And so, not to say that's a good thing or a bad thing, but a lot of things just to kind of be watching. LQD hanging on to this lower end here. Could be forming a basing pattern. Maybe it's ready to push higher going forward, or maybe it's about to fall off the table and come back down. Also match the TLT, which basically has continued to fall off the table here. But it seems like the TLT seems like it's found a spot that it's, having a pretty good pause at. We kind of paused at one spot here for a good period of time back in the beginning of January. So maybe we do that here. Maybe it's going to be a little bit longer term. But it seems like, if we get through probably the low that we put in on Wednesday, like it's just going to continue to drop off, and it'll take the other bonds with it. That means yields are pushing up and all that kind of stuff. All right, making this one kind of quick this week, mostly because there was a lot of earnings. There's so much to go through that honestly, don't really want to make this thing an hour long, so I'm not even going to worry about going through all the earnings. For the most part, though, not too bad. Tesla was really bad. Other than that, like there was some pretty good stuff. Intel was also kind of bad, but there's some pretty good stuff from TSM. There was also some pretty good stuff from Lam Research, that kind of those areas. But this next week is going to be the big one for earnings. We have all the big tech companies reporting earnings this week. AAPL, Microsoft, Alphabet, Meta, Amazon, all reporting. AMD's reporting. So yeah, we have a lot reporting this next week. So every day I'll be talking about it. And I think most of them are reporting Thursday after the bell. So that means this next Friday is going to be very, very busy on trading. So hopefully they don't all miss, because if they all miss, that's going to be a really bad day there for the market on Friday. So the RSP, the equal weight SP 500. I mean, we're just sideways consolidating here. We're not doing a whole lot, and not to say that's a good or bad thing. I always like to consolidate, and the thing I do like about it is we did break above those highs that we put in back in 2023. This is a really good spot to consolidate. Really good spot. It's not like we just took it, and we reversed, came back down. We tried to do that, but we have constantly continued to consolidate here for the past few weeks, and this is looking pretty good to be bullish on the RSP. The DIA, the Dow Jones Industrial Average ETF, throwing a little bit of an upper wick there on Friday. Nothing crazy. Hasn't broken the moving averages. To me, this is probably just continue bullish. The IWM Russell 2000 ETF. This is getting to a point, I made a comment about this earlier in the week, that if we've had multiple days of gap ups and sell-offs here, and if you're trying to be bearish here, which, I mean, I understand that, it better happen real soon or it's not about to work. And I'm kind of getting back into that boat of it ain't going to work to be bearish here. You see selling volume dropping off. We've been selling from these two gap up highs, sold off, but we didn't break down through the moving averages. Then you can see Thursday we pulled down to the moving averages and then got bought up. Friday we didn't even make it down to the moving averages. So the sellers are probably losing their momentum here to push the market down. And to me, unless something happens pretty soon to push this market down, it seems like we're going to be bullish here over the next couple days. The Qs, triple Qs. Well, obviously we know we have a lot of tech earnings this next week, so this is going to determine a lot. Well, one thing that was very interesting that I was watching this week was we had a pretty good little, let me bring up the brush here. A little bit of an island reversal right here. We didn't form a perfect one, but on Thursday we did pull down and actually did overlap a little bit with Monday's upper wick there. So we had a little bit of an overlap. I was kind of hoping we would get that perfect island reversal, so we didn't quite get that. Friday we did gap up, or we did gap down, but didn't quite get below that Thursday low, so we didn't quite form a perfect island reversal there. But if you take the bodies into account, then yeah, I mean, if you don't count the wicks, some people don't count wicks. I count wicks because we actually trade those price levels, so I don't know why people don't. But not a perfect island reversal, but definitely could be one where people probably bought here Wednesday and Thursday, kind of got trapped a little bit. So if we break down on Monday, Tuesday, definitely probably going to make at least a quick run to at least the 10 EMA. There's a little bit of room there to make a little bit of a bearish play. But don't forget, we are going to have a lot of earnings Wednesday, Thursday, Tuesday, Wednesday, and Thursday are a lot of them. And then we also have Fed on Wednesday. Okay, it's going to be very important that you understand all those events kind of going on. So we will have a very busy week coming up. Now, the next thing I want to kind of show here is SPY. Continue to make all-time high on Friday, intraday high at least with this upper wick. The Qs, as I kind of just mentioned, had this gap down. We did not, so we have a little bit of a switch here on the market. A lot of the reasons why the Qs gap down as much or hit more of the Qs than did the SP 500 was because Intel's earnings, that was just not good. Intel got smoked by like 12% on Friday. So obviously didn't hit the SPY as much as the Qs. So we have a little bit of a switch here. I kind of like it, mostly because of how you do have a little bit of an island reversal type signal here on the Qs, but you got a little bit of a higher high on the SPY, while the Qs have made lower highs between Wednesday to Friday. So it's kind of interesting look there on the market. It's hard to tell, like, is this the tippy top of the market when we roll over? And I wouldn't be willing to bet anything on that right now, but as for now, this is the main zone. If we get through this zone, then we could probably talk about major downside on the market. But for now, there's nothing to indicate that that'll be happening. The only other thing that I want to kind of just bring up is how the weekly looks here on the Qs. Pretty large upper wick there So if we do have a bad week of earnings on especially on tech, and we come down and we get back below the previous all-time high, back below 408, that would form a pretty good, evening star reversal pattern there. Be curious to see if we do that. But I'm not saying we will. I'm just saying that with all the catalysts that we have coming this week, especially in the world of big tech, it could happen. So we'll see. It'll be an interesting week. It's going to be a lot of activity this next week, and we'll see how it goes. Outfunders, have a great weekend. Enjoy your football, your championship football Sunday, and talk again next week. Alrighty, take care, Outfunders.